Hey, good morning. This is Meir Valensky with Driving Markets. Hope you're all well. Okay, so yesterday was Thanksgiving. The markets more or less closed. However, the overnight futures in the States and in Europe and Asia have come off significantly. At the moment, the Dow futures down by about 475 points as we talk. Main reason for that is that retail sales are through the roof. And as long as retail sales are going up, then there is going to be inflationary pressures, as I stated many times, and then you've got the risk of interest rates rising. In my opinion, interest rates are going to rise, but no one seems to be paying attention to that so much. As I said in the last few videos, probably look to go short, and the markets have come off. So whoever took my opinion and went short of the market would have made a few quid. The FTSE at the moment is going to open around about the 71.84 level, and the Dow US 30 is going to open around about the 35,350 level. Nasdaq's off 200 points. S&P's down 30 points today on the morning. The market's not even opened in the States yet, and the futures are already indicating a massive sell-off. I think that's going to continue. You're likely to get more pressure as long as retail sales are building up, and they're probably going to rise even further towards the Christmas period. As I mentioned, you probably see inflation at about 7.5% in January, and we'll take it from there. If retail sales continue to push forward after Black Friday and after Christmas and then January, you could be seeing inflation closing at 10% next year. Those are double digits inflation. What the central banks will do about that is anyone's guess, but in my opinion, interest rates are only going up. So if I was you, I'd be very cautious of the market. Something to look at, pound dollar. The pound's been sold off significantly. That's because the dollar's getting so strong on the back of speculation that interest rates are going to rise. However, looking at the pound generally, I think it's been oversold. It means it's been sold off too much. It's probably a good opportunity to look to get in around about these levels: 133, 132.50. Put a stop on a 131. See where it goes, and hopefully you'll make a few quid. Again, all of this is my opinion, no advice. I don't want to be sued or taken up by compliance or anyone else saying this is advice and Mayor told me to do this. I didn't tell you to do anything. I'm just giving you an opinion. Remember, only trade with regulated firms. Don't trade with non-regulated firms. They're all a bunch of crooks, criminals, and run by a bunch of criminal gangs and mafia. So don't get involved in that. Beware of crypto scams. Beware of any type of scam. And beware of people calling you on a WhatsApp number. I call on WhatsApp numbers, but you can see my videos and you can check me out on LinkedIn, Google, WhatsApp, Instagram, Valensky Meir, Twitter, etc. So this is Meir Valensky with Driving Markets. Hope you're all well. Have a good weekend. Trade carefully, and hopefully you'll be successful. All the best.